Are we in a bubble in your mind?
I'm going to make it 3 for 3. We're not in a bubble here. When you look back to the bubbles that we've seen in the past, the 90s, there's really no comparison here. Valuations are a bit elevated, but nowhere near those 90s levels. And they're well deserved in many cases with higher rates of earnings growth and strong balance sheets. So I don't think we're in a bubble here at all.
Okay, so there's no doubt, Robert, this is not like yet what we saw during the precursor to the great financial crisis, certainly not during .com, but there are pockets of the market that act in that way, and that's maybe the reason why some folks feel as though it could be in a bubble. Those places, specifically in technology, are they worrisome for you?
They're not especially worrisome. Again, for most of these companies, they're growing at a very fast clip in terms of earnings. They tend to have very strong balance sheets. It's not to say that there aren't some areas selectively. We've seen it with the meme stocks pop up here and there where valuations get a bit out of control and you have these sort of selective bubbles rolling around. But broadly speaking, with technology, those companies are really earning their way into those valuations with strong earnings and strong balance sheets.
Do you feel as though there are still places right now where there is relative value outside of technology? If you look towards the broadening of this market rally, can it continue?
I do think so. Small caps have started to participate, particularly in March. I think that's a trend that could continue. We may be on pause for that a little bit with the Fed policy and the fact that the Fed's probably going to be moving a bit slower than most people had expected. And I think that's one of the catalysts around small cap. But there is a lot of good valuation opportunity in small cap. And those trends in productivity are likely to extend there as well. So while it started off in the large cap space, smart companies in small cap are going to be taking advantage of that productivity as well and using it as an opportunity to boost margins.
How much is the market narrative in the coming months and quarters going to be about whether the Fed will cut interest rates?
I think the Fed is front and center here, particularly leading into at least the June meeting, if not July. In my opinion, the Fed has shifted from being poised and sort of ready to move on the basis of looking at real rates and looking at interest rates versus inflation. And I think they've shifted to more of a hard pause. And it seems to me that they need a catalyst to move now. That catalyst may not come for a while as inflation has been declining quite slowly. So that's really the struggle we have here is that earnings in the economy remain quite sound, but the Fed's not likely to provide much help until later into the summer.
Technology, obviously, I talked about before as being the focal point for a lot of investors out there. I'm sure you have to have some kind of a weighting in there as well. Is there a sector outside of technology that becomes your favorite in this kind of environment, given your view on the Fed and what we have to do as an economy and a market going forward?
Yes, we've had a favorable view of the industrial space for some time. Part of that's based on domestic policy, especially in an election year. And we've seen those trends starting to unfold. There's been a lot more spending. You've seen the charts that I have as well on construction spending and manufacturing. You've had this push towards building up, durable and resilient supply chains and more activity in the United States. And that benefits the industrial sector. And we've seen tailwinds there in earnings, and I expect that to continue for the course of the year.